brokers give leverage? Because generally people don't possess enough funds to buy their desired quantities of securities. So the brokerage firm, what they do is they give uh, leveraged to the people. They give leveraged amount. Suppose you have a capital of 10x, then if your broker is giving you 2x leverage, then your capital will be becoming 20,000 rupees. This x which represents your capital. So this is how you can trade with 20,000 rupees with a capital of 10,000 rupees using leverage in any brokerage, in your brokerage account. And this amount is only for intraday purpose, not for positional or any other purpose. Known brokerage houses like Zerodha and Upstocks provide 10x leverage on your funds. Okay, now I'll start recording the session, and I'll stick to today's part. So, hello guys, this is Gaurav, your analyst, your advisor, your mentor at Finance Advisory. Today is your second session, and today also we are going to discuss about some basic terms that you should know before entering into the market. This session is too dedicated to the new people in the market. There are some points that you must note down. That is, the stock market opens at 9:15 and closes and shuts down at 3:30 p.m. Okay, and the market usually starts to wind up at 3:20 p.m. and this is the time at which you have to close your intraday positions. You cannot take your intraday positions beyond this time until and unless it is a CNC order, because cash orders and other orders, MIS and other order types, they square off at 3:20 p.m. The stock market remains closed on weekends and on specific holidays. Equities are company shares, NSE and BSE. They are the union of brokers, that is a National Stock Exchange and Bombay Stock Exchange. NSE, yeah, I said NSE and BSE are none but the union of brokers. Moving forward, what are brokers and sub brokers? So a broker is someone who closes a deal between a buyer and a seller and gets commission for that. And that is what known brokerage firms like Zerodha, Upstox, Alice Blue, and Bland Blad they are doing to us. Now let me relate something to it. So why you will say, sir, if I want some shares of a company, whom should I approach? Why shouldn't I approach to directly to the company or to NSE, BSE? Why should I approach to Zerodha, Upstocks, and why should I rely on them only? So I've got example for it. Suppose if you want 2 or 3 packets of biscuits, whom will you approach? Will you approach directly to the company of Britannia? Suppose you want Britannia biscuits, you will approach directly to the company of Britannia or wholesalers or retailers. So if you approach to the company of Britannia, they will say that we don't have rights to do so. We have issued our IPO. Whatever you want to transact, just go and transact into the market. Now they will say that if you want, you can take certain percentage of our uh, shareholding. You cannot. We are entitled to do that. You will not going to give you shares. So uh, yes, they don't have the authority to sell the shares, sell their products in small quantities to you. Okay. Now, if you approach to a wholesaler like NSE, if you approach to NSE and you say that I want to two three means a wholesaler, and you say that give me 2 3 packets of biscuit. So he will say, why only 2 3 packets? I'll give you 2 2 3 dozens if you want. I won't give 2 3 packets. And then what will happen? You will say, no, I don't need that much quantity. I will go to a retailer now, and those retailers are like Zerodha Upstocks. Now here you can buy even 1 packet of biscuit. They won't ask you, nor they would say you that okay, buy five more pieces, then only I'm gonna give it to you. The same way happens in market. The companies list their stocks. Wholesalers are NSE and BSE, and retailers are brokers. Retailers are the sub brokers like Zerodha and Upstocks. These are sub brokers. These are not brokers. Brokers are NSE and BSE. That's it. Moving forward, these are the topics that you should keep in your mind. It's nothing that rocket science that you will have to make some research about it. What is a trading account? So a trading account is an account that is similar to a bank account. Okay, you have some cash deposited into that account, and purchase and sales of securities are done through that account. Remember I said sell or purchase of securities. Okay, just this thing. For this thing only your trading account is made. The money that is in your trading account comes from the bank account that you have linked into it. Securities are purchased through trading account and held up by opening a demat account online, and payments are done through the linked bank account. Okay, next up, what is demat account? Demat account is an account that is used to hold shares. The shares that you buy in your trading account. Trading account is for only for buying and selling shares. The shares after buying and selling, they go to your demat account. Okay. The purpose of opening demat account is to hold shares that have been bought or dematerialized, thus making shares easy, means share trading easy for users during online trading. Okay. What is the relationship between demat and trading account? As simple as that. Like I've given you example out here. Suppose you buy 100 shares of worth rupees 10 each. So this transaction has been done through your demat account. The 1,000 rupees will be debited from your demat account. But where does those share go now? They don't stay in your trading account. They go in your demat account. Okay. Buying and selling of shares is done in trading account, and your shares are deposited into your demat account. That's it. Next up, how do you open a demat account? What are the documents required? So the documentation required is a PAN card, a Aadhaar card, a passbook front page, cancel check, a scan of your photograph and signature, the date of birth, or I can say the credentials of your PAN card and your Aadhaar card should be same, and both means your card should be linked to your phone number. In absence of any of the above documents, your account opening may fail until and unless you are approaching an offline broker. Okay. Next up, important terms in the market. Now, here comes the interesting part. Whenever I tell people that yeah, I work in means I am a trader, I am a professional trader, whatever I talk to people, they first ask me, those novice ones, they ask me, यार ये निफ्टी क्या है, ये सेंसेक्स क्या है? They ask me this question, this silly question. So, what is Nifty and Sensex? They are indicators. Indicators of what? Indicators of the market sentiment of the whole economy. Okay. If Nifty and Sensex both are booming upwards, then you will say that yeah, that is a very sound economy. That economy is going upwards. That economy might push upwards in future as well. And if they are coming down, then what you will figure out? You will say that yeah, this country is in the stage of recession or the economic depression, whatever. But the country is declining in its value. Its economic state is not well. That is what you're gonna figure out. Okay. Nifty indicators of the Sensex is a short form of sensitivity index. Okay, Sensex is a short form of sensitivity index, and Nifty is the short form of National 50. Nifty 50 is the short form of National 50. Okay, what exactly Nifty 50 is now? Okay, Nifty 50 is the benchmark Indian stock market index that represents the weighted average of 50 of the largest companies listed on National Stock Exchange. Okay, such big definition. One thing that I'm going to tell you, stocks don't work according to Nifty 50. Nifty 50 works according to the stocks. If Nifty is falling, you won't say that Nifty is falling, that's why stock is falling. It's not that. When stock falls, then only Nifty can fall. Make it clear. It is one of the two main indices used in India. Nifty consists of 50 largest companies in our country. Okay. Any doubt as of now? Anyone? Or should I proceed further? Or you want to pull the brakes? Okay, fine. Sensex. So Sensex, which stands for Stock Exchange Sensitive Index, is the stock market index for BSE, Bombay Stock Exchange. And Bombay Stock Exchange is the oldest stock exchange in Asia. It calculates the movement of BSE. Sensex is the compilation of 30 largest companies in India. Now you will say, sir, then Sensex is of 30 companies and Nifty is of 50 companies. Still, Sensex is more than Nifty. What is the matter? Then I will say that it is based on the calculation, how their weighted average is calculated, and on those basis only the points are allotted. So I don't know about the calculation, but yeah, the calculation procedure is different in both. Next up, we move to some terms that are gainers and losers. Okay, so a gainer is a stock which whose opening price, I mean, whose closing price was more than the opening price. Suppose the stock opened at this point and closed at this point. So its opening price was obviously higher than its closing price. I mean, I'm whatever what I'm saying. Its closing price is obviously higher than its opening price. So this gainer is denoted by green color. Okay, and a loser is a stock. A loser is a stock whose closing price is less than its opening price. Okay, suppose a stock opened at this price and closed somewhat at this point. So this is a loser and this is represented by red color. Okay, as simple as that. A gainer is a security that has a higher price at the close of the market rather than its price at the open. A gainer is denoted by green color. Losers are the securities whose price at the close of the market is lower than its open price. A loser is denoted by red color. That's it. Okay. Moving forward. Now, what is volume? This is a very important cheese. This is a very important thing in technical analysis. Volume gives you an idea that how much volatile that stock can be. The I've written such a big definition. Volume is the number of shares of securities traded during a given period of time. Volume is an important indicator in blah and blah. Forget these stuffs. Volume is number of sellers plus number of buyers at that particular point of time in that stock. If you are looking for a candle of 20 15 minutes, then if you check its volume, it won't say that it is buyers more or sellers more. You have to figure out that means it's number of buyers plus number of sellers in that stock at that point of time, and that is what is volume. Volume is an important indicator in technical analysis because it is used to measure the relative significance of a market move. The stocks which don't have much volume are the stocks are the stocks which we will call involatile, and we haven't to trade. We will not trade on involatile stocks. Okay, we need some good volume to trade on stocks, and Nifty 50 and Nifty 100 are the stocks in which you will find always very good volume. Okay. LTP is last traded price. When you click on a candle, it shows you open, close, high, low, and it also shows you last traded price, in which means at what price the stock was some moments before, and people actually jumped onto that stock. That is LTP. Bulls and bears. So now let's talk about two kind of animals who influence market makers. The market who created market, these two animals these were the two animals that influenced the market makers. A bull thrusts its horn up into the air while a bear swipes its paws downwards, and that is a metaphor used for the move of the market. When a bull thrusts its horns upwards from down to upward side, it's called a bull market. Okay, market is going upwards. And while if the bear swipes its paws from the upward direction to the lower direction, it's called a bear market because the market will be going down. A bull market is a market that is on the rise and where the economy is sound, as I said earlier. While a bear market exists in an economy that is receding, where most stocks are declining in value. That's it for bulls and bears. Now, stop loss. This is the most important term that you should keep in your mind while trading. Intraday trading is more of a risk management. I said this to you yesterday. Okay. As the name suggests, stop my loss because no one likes losses. But yeah, losses are a part of the game. If you're making profits, then you also have to bear losses. A good trade must end with a big profit, a small profit, no profit, or loss, or a small loss. We don't want a big loss, never. A stop loss is an order given by you to your broker to sell a particular stock at a particular level of loss that's in your mind. A strict stop loss not only protects one's capital but also saves a person from incurring further losses. When a person incurs losses, then he is demotivated. So, better to lose less and stay motivated for the next day. Always have a specific loss limit. A good trader, never risks more than 2 to 3% of his capital in a single day. Think about a person who is risking 10% of his capital in a single day. It means 10 wrong trades will wipe him off out of the market. While a person who is risking just 3% of his capital in a single day, he has got one whole month to blow his account. Okay. So this is why stop loss is very, very, very important. Let's find out how stop loss works. Okay. I will say you the story. Suppose a person, suppose I bought a company shares X at price rupees 100. I bought 100 shares of it. And I thought my view is short term now. First, my view is short term. I didn't think about long term. Now, after a week, I saw that the company shares have dropped to 90 rupees. So, what happened now? 10% losses. Me being a smart fellow, a greedy one, I will say that, man, my analysis can never be wrong. And what I'll do is, I will outsmart the market out here. I will outsmart the market and I will buy more 100 shares, averaging my position down to 95 rupees. Okay. Now, after a month later, I find that the shares that I had averaged down to 95 rupees, those per share value has decreased to 75 rupees now. So now what I'm gonna do, I will say, now I will hold this share for long term. This share will definitely go high in long term. So what will I do is I will hold those shares and I will again stick to my analysis. I will say my analysis can never go wrong. Though I am at a loss of more than 20%, my analysis can never go wrong. And what I will do is I will hold those shares. And after another month or after 2 months, when I notice to my portfolio, now the shares value is at rupees 50. So what is my losses? It's approximately at 47%. And at what price my heart said that my analysis can never go wrong and I doubled my quantities. It was 90 rupees. 10% is obviously much, much, much less than 47%. Okay. He would now only have protected. By placing a stop loss order at 90, he would not only have protected his capital but also would have cut his losses. That is me. Therefore, stop loss is the lifeline of the game. Always work with your lifeline. There is one more example, and that is a story that I've written out here. If you put a frog into a vessel and start heating up the vessel, the frog won't jump out of it. It will start adapting itself to the temperature of the water. And a time will come when the water will reach its boiling point and the frog would like to jump out. But frogs are very, very lazy animals and they won't jump out. They will just sit there only. And after when a time comes, then it has to jump out, otherwise it will die. A situation comes in which the frog had totally lost its power in adjusting its body to the temperature and it dies. It should have jumped out. So what is the moral that we find out from the story is it should have jumped out as soon as the temperature started to rise. Same way, there was plenty of times where we are emotionally attached to the trade. The attachment kills the ability to think when to exit. So accept the losses. Let us decide when to jump. Let's jump while we still have strength. That's it. Now, this is another important thing, that is risk to reward ratio. Okay, just a general question to everyone. Do you think that a person who is having accuracy of only 40%, that is 4 out of 10 trades is winning, can that person be profitable? Just a general question. Just say yes or no. If a person, I said that a person who is having accuracy of only 40%, he is winning only 4 out of 10 trades. Can he be profitable according to you all? Yes. If his risk to reward is good, then of course he can be profitable. A gambler, a person who gambles, what is his probability? What is his risk to reward ratio? Risk to reward ratio of a gambler is 1 is to 1. Yeah, perfect. 1 is to 1. Can a gambler be profitable? The answer is yes. A gambler can be profitable. Now, how? There are two terms that's going to help you out here. Okay. First is your accuracy, and second is your risk to reward. A person having accuracy of 40% can be profitable. How? If his risk to reward is good, he needs to have a very good risk to reward ratio, somewhat like 1 is to 2. That is 1% risk and 2% gain. For earning every $2, for earning every $2, he is ready to risk $1. Okay. Now you can calculate it by yourself only. 60%, 40% accuracy, that is 4 into 2% equals to 8% profit, and 6 into 1% loss equals to 6% loss. So he is at a profit of 2%. The answer is yes. A gambler, a person who is having accuracy of 40%, he can also be profitable with a good risk to reward ratio. While a gambler, he can only be profitable, if his accuracy is more than 50%. If his accuracy is more than 50%, then only he can be profitable. Say his accuracy is 60%, that is, he is winning 6 into 1, it equals to 6, and he is losing 4 into 1 equals to 2, it equals to 4. Difference 2. This is his profit. Got it? Any doubts in this section? I need more replies. I need some more replies. Okay, fine. So if risk to reward is clear to everybody, I'll proceed further. Just let me check what else is left. So I think I'm teaching too fast. Don't be a doubt on volume part, sir. Okay, I will clear that doubt for you. Am I teaching? Am I going too fast? Because these topics I used to take two sessions. Means the two sessions in the sense two links I used to share for clearing these topics. But I'm doing this in a very fast now. So sometimes it happens that any stock has extremely high volume in between of the day, 1 minute, but stock price neither rises nor falls at that point of time. What does this indicate? So that indicates indecision. Okay, though the sellers and the buyers are there is a fierce battle. You can say that there is a fierce battle between the buyers and the sellers, and they are not able to decide where the market is going to go. And that's what you can say. So. This was the last topic for the day, I will say, because later part is to be explained in the next class. So anyone having any doubt as of now? Any complete beginner here who is totally new to the market? I need to talk to. I means need those people. The people who are not raising any question. Don't be shy. Don't worry. So yeah, I have a complete beginner out here. So is everything clear to you? Because I need queries, I need questions before proceeding further, and don't be shy. Even your lamest questions are going to be cleared by me. Even your lamest doubts are going to be cleared by me. So I think I'll end the session now. I'll end this recording, then I'll proceed further with the chit chat part and with doubt clearing section. So thank you everyone for joining in. Goodbye, good night, and see you all tomorrow. Okay, so what is the question? What if candle size is small and it reflects high volume bar? If the candle size is small and it reflects high volume bar, then you can say that people are entering there, but still the market is not able to decide where to go. There is selling and buying. As I said, sellers plus buyers is a candlestick, is a volume stick. Sellers plus buyers is a volume stick. So if there is many transactions at small price range, so it does happens that people are buying from below and people are selling from upwards, and the candle size is small, but the volume is indicating that many people are engaged into those candles. So what we have to do is wait for our setup to click before taking any trade. You can just figure out that yeah, people are battling there just to take markets in one direction, and the stock is not going anywhere. Any more queries? Anyone? Or I think this session is very short lasting for today. Session lasted very for a very less time. Earlier, I used to take a whole session to explain these topics. That is one whole hour, minimum 40 to 50 minutes. Because in those batches, people used to lay down questions, a lot of questions. This batch is in laying down many questions, many doubts. Gap up, gap down, sir. The gap up, gap down is just because the stock is being traded in news. First thing, it can be a stock is trading in news. Second can be there is huge volumes from lower side, so all of a sudden a huge amount of investment after the market flew into the stock. Now all of a sudden that stock is going either gap up or gap down, whatever may be the scenario. How to trade gaps, that's I'll teach you later. Don't worry, I'll teach you how to trade gaps. Even I request beginners to please get your doubts cleared, if any. Many of us here have basics cleared. Yeah, that's my line. Thank you for laying out my line. Okay, so in 4 minutes, this link will expire. Should I share one more link to carry forward till 6, or should I square off this session? Okay, I'll share one more link. Don't worry. Let's have an intro class then. What's say? A little chit chat kind of session. They'll tell us something about you if there are no questions. What do you want to know about me? You can even unmute yourself. I don't have any issues with that. Unmute yourself to speak out. How you started? So I started trading since 4 years, and your experience in trading 4 years, 2 years of intraday experience. Anything related to the market? Yeah, I started off with very small thing. Your first intraday trade. My first intraday trade was on Reliance, and I had made a loss of 4K because I didn't knew what was happening in front of me. I had made a loss of 4K in my first ever intraday trade. The capital that I began with was a very small capital. I gradually built up that capital by cutting off my expenses, by putting some money out of my pocket money. And yeah, this that is how I gradually increased my capital. Then I used to do some savings, FDs, RDs after I went for high school studies. And after that, gradually, my capital kept increasing. The money inflow was good, and I was doing positional with my neighbors. So I wasn't in any kind of losses. My neighbors were holding the IPO of Bajaj Twins since its listing. Consistent profit from when? I was consistently profitable from day one. Uh, from day one, I was consistently profitable in positional segment. From for intraday segment, I had to take a break of 2 months after my first loss. After I had my first loss, I took a break of 2 months, and I started to learn about technical analysis. And once I learned about it, I came into it. What age did you start? I was 15 then. So this link is expiring in a minute. I'm sharing you one more link. Just join in from there, guys.